Welcome to another edition of Deal Hunter. I'm your co-host, Mitch Flax, founder and CEO of Net Equity Capital. With me, as always, my boy, Tom Staub. Good to have you back from Hawaii.
Yes, sir. How you doing? By the way, I'm feeling way better. Kicked the COVID, went to the sauna a few times. Been back, in the gym. I'm feeling much better.
You're looking svelte. After I had COVID, I lost 15 pounds. Yeah. And as a 41-year-old, I would, 10 days of COVID or maybe going to the gym, 15 pounds. I don't know.
That's
risk
good.
Return.
Yeah.
Anyways, you look good. I'm glad you're healthy. Hawaii, not a terrible place to have COVID, and good to have you back. We're going to give you a quick recap of our past deals. Just to let you know, last deal we spoke about here on the Deal Hunter podcast was the Irish social housing. Those folks who are sponsoring the deal have actually opened this up to more of a GP-LP format. So that traditional, 70, 30, 80, 20 blend. For those folks who are interested in looking at a minimum check size of $100,000, those terms are actually better than they were before because you've got more of an equity on the back end. Feel free to email us at mflax@netequitycapital.com. Tom, update on you. You just recently closed on the last Lockhart deal.
We had a hell of an August. I was warned not to have two deals in 1 month, and I did it anyways. Lesson learned. So we did close one deal, oversubscribed by 45%. So we're good there. We have a remaining $600,000 in that deal. That's to build 51-acre lots of land, and we're also going to be doing vertical on that now. So if you want to learn more about that one, the details will be in the description of this video or audio podcast, and you can email me for some more info. The other one, we raised about 10 to 15% more than we needed in round one. That was a $4.1 million raise total. We're looking for an additional $1.3 million on that for the next phase, which is entitlements, engineers, and all that stuff. So
what are the investor terms are going to look like on that? Because I know the last one was 27%. Very.
Typically on these deals, in the past, my sponsors were experienced, but they weren't the creme de creme, right? And so we had to offer more on those returns. 27% was on the bigger deal, 30% was on the smaller deal. Going forward, that's going to drop now by 4 points a piece. So 26% on the smaller deal for the second raise, and 23% on the bigger deal. So
27%, very attractive. Some of the best preferred I've seen out there, paid out annually, correct?
That's right.
All right, I love that. Today, we're going to be talking about a new opportunity. I was actually very fascinated when you first told me about this because I think it's a dynamic market, underserved market in Fort Hood, which is in Central Texas in the Temple MSA, I guess Temple Killeen MSA.
Yep. Yeah, it's about an hour-ish north of Austin.
Yeah, and about 25 minutes just west of Belton. So I've been up there, done a lot of business in that area. It seems ripe for development. What first attracted to you to Fort Hood and trying to address this market?
100%. So I don't know, a few months ago, I had these 1031 exchanges to do. And I knew this market had massive problems with their rentals. You got to keep in mind, this is the biggest U.S. Army base in the United States, and they're growing in soldiers every day, right? So that being said, their soldiers are having a major problem finding rentals to a point where they're filling up motels, hotels to live. And by the way, these rents they give their soldiers stipends for market rents, and they still can't cover their bases because they're living in hotels. So what you're seeing, and I discovered this from my own experience trying to do a 1031 exchange, I was trying to buy single family rentals up there because they're priced at $220 in the cash flow, which is hard to find in this market. And I was getting outbid on every single deal by cash offers offering 20 to 40% above ask. So I was like, okay, well, what the hell is driving this? And then I dug deeper and I understood, wow, this is a incredibly underserved market for supply of rentals. And it's kind of sad actually when you hear the stories of soldiers being broke because they can't afford the rent of hotels. Anyway, so when I said, well, I got with my team, I said, if we were to think of any best project right now, what would it look like? And we said, well, Fort Hood, we absolutely know the product that's needed. which is basically multifamily units. And so we looked at numbers and we said land cost is really attractive up there. We can probably get a piece of land for around 1.5 million to $2 million bucks. And we're going to build 120 triplexes to help address the market for rentals up there.
I love it. Analyzing the Killeen Temple MSA, surprising for most folks that may not know this, but the average household income is $73,000, yep, which is pretty good for Texas and an area that's, perhaps considered, not a major metro, but one that's developing. Interesting point that I read, Baylor Scott and White has made that a hub for their research in Temple. So that's just about 30 minutes east of Killeen.
Yeah,
what else about?
We have a not a partner, but we have a connection up there that built a few dozen duplexes in the past 12 months, and before they even broke ground on the duplexes, they were sold out, all by investors. We have 220 investors right now that want to buy duplexes or triplexes in that area. I myself,
and they just can't find it.
They can't. It doesn't exist. There's 2 on the market right now, and they're go out and look on Zillow and see what you think about those.
Wow.
Yeah.
What is the labor force look like there? I mean, I assume it's got to be, mainly armed forces. I mean, what does that look like?
Yeah, look, it's not a tech economy, right? There isn't a huge halo effect from Austin. It's just a little bit too far. The growth is happening, but it's more towards the national average, right? Population growth of probably 1% to 2% year over year, which is better than the national average, but not as good as Austin. The wage growth is not as fast as Austin, but you are seeing some wage growth. You're looking at people who work at Fort Hood, right? They have 45,000 soldiers in Fort Hood, 10,000 officers. That alone is a massive base. And keep in mind, these people rotate every 3 years. So no one's really buying a house there, they're just renting, right? And that's a growing number. People are going to be moving there. There's a town called Salado and Belton. Both towns are expected to see substantial growth over the next 2 to 3 years in population. Salado is a really cool art town if you haven't been. There's breweries and music and wineries, and it's kind of a hidden gem, but it's being discovered, right? And so generally the dynamics look good from a demographic standpoint. The renter pool tends to be able to afford rents of $1,200 a month for 2 bedrooms and about $1,500 a month for 3 bedrooms. So you put that in perspective, what that means is these triplexes that we can build, we're going to gross $4,000 to $4,500 a month, and be able to turn around and sell these cash flowing properties at like a 7 to 8% cap rate for about $530, $540 on the market. So
yeah, some of the data that I was pulling up here off of Killeen, their economic website here. 42% of the population are renting. So 58% own. And it certainly looks, from what you're telling me and from what I'm reading, it definitely looks like an opportunity that makes a lot of sense from a market standpoint. How do you make the property work in this area where the cost of acquisition and the development? I mean, tell us a little bit about that and how you make the numbers.
So what's really nice is that the builder that I'm partnering with on this, great guy, he's an award-winning builder in North Austin and all through the Belton area. He's already doing this in Arkansas. And if you don't know much about builders in Texas and Arkansas, they kind of go back and forth between those 2 states, given how they're relatively close to each other. So they can move the teams pretty easily between the 2 states. So we know that this model works. We know this product works. And we have the numbers already in Arkansas. Now, that product is also all sold out, right? And they just started that 6 months ago. So we're taking those comms and applying it to the same market and just essentially rinse and repeating the exact same model in this market.
Yeah. So as I was looking at the pro forma here and we identify the property, when you look at this, the numbers look pretty similar to some of the numbers I saw in Lockhart, given, what the profit margin percentage looks like. I think one of the things that we learn, investors want to know, what's your break even, right? And so at a break even, at what point can my investors still expect a return? What do you say to that?
Yeah, it's a good question. But I think let's take a step back, right? So in this deal, because we're doing both the horizontal, well, we're acquiring the land, doing the utilities, and then the vertical. The way this works in these deals is that we have two entities, right? And so we have, well, really three. So we have the one that purchases the land, we have the one that manages the horizontal or utilities, right? And then that partnership sells it to the entity that does the vertical. So when we get into this deal, we already know that we're securing the exit, right? Because that third entity is buying the land at pre-negotiated prices. So that part's, there is no downside. There is no break-even situation. It's, as long as the market doesn't turn and we think we can make a profit by building, we're going to have that exit at those prices.
Yeah.
So,
Well, let's say the market does turn. And I think that's kind of what, we'd like to address, although you did kind of address it in the pro forma where you see, a 20% correction and you're still at a 23%.
Right. So then it comes down to cash flow management. And as an investor, I gotta think to myself, okay, well, how long can I pay my investors while sitting on the sidelines? And we'll have about 5 years of cash burn to break even.
So investors with a high degree of confidence can expect their return
Recessions
of
don't last 5 years.
26%.
Yeah. So, but that's on the land piece, right? So now we sell it to the vertical, and this is where I think if there's risk, this is where it's going to be. But by the time we get the vertical, we're going to pay off the investors before we even get to that point. So really, the investors should be caring about the horizontal. What's break even? Well, if there's a recession and downturn, we have 5 years of enough cash to pay our investors and the OpEx to keep it on the sidelines until the market recovers.
How much, and this is particular for phase one, correct? We are speaking about the phase one land development component.
That's right.
What is the total raise?
The total raise is 1.5 million for the purchase, and then it's going to be an additional 1.8 for the horizontal. So $3.3 million.
So 3.3 will be the total equity needed to develop. And will phase one be in two phases? Because you've got to have the initial acquisition, right? And then you'll have the second. So, but will that investor expect to have, will those terms be the same for both investors?
No, it'll take the same format. So we're looking at a 25% preferred return annually on round one, and probably a 22% in round two.
Got it. So obviously less risk in round two, therefore you've got less investor yield. Totally makes sense. What are some of the things if I'm an investor and, similar to the way that I've invested in previous deals of yours, what might be different about this property versus, the last deal that you did in Lockhart?
Yeah. So the deal in Lockhart, we had some LOIs in place before the deal was even closed, but we still don't have all those lots committed to, which partly is intentional because we think the market will go up.
Yeah, you want it to hit the market, sure.
Yeah, so you don't want to lock in prices now and lose 18 months of appreciation. So we're kind of waiting on that, but also selling some to lock in some of those gains. With this one, the entire parcel is committed to by the builder, that being us, right up front. So unless the market drops 40%, which I don't think that's going to happen, but if that doesn't happen, we're going to proceed with the deal. We have an exit price established. And I think we're off to the races. So it's a little different. There's not as much, unknown in this one, which is why the percentage is lower. And another piece of all these deals that's probably worth mentioning is my personal mentor, David Wilson, is now our sponsor on all the deals. And if you want to know who he is, you should take a look at his resume. The guy's built, 12 multiplex theaters, 20,000 doors in hotels, 6,000 single family units, 20,000 square feet of medical space. The guy's no joke, right?
I was blown away. How did you meet him?
I met him in Japan when I was living there. A friend of mine was a lawyer for him, and I met her and, out in the scene of Tokyo, and I got a chance to stay in his enormous mansion in Bali and then met him there. And the guy he's in his 80s. He's extremely experienced. He's the biggest developer in Hawaii and one of the biggest in Southern California. So he just got done building 2 casinos out in Eastern Europe. So yeah, he's next level.
Well, it's great to have mentors. I always tell everybody, whatever business you're in, whatever it is you do, have people that you learn from. If you're the smartest person in the room, you're in the wrong room.
That's right.
I've got two mentors that have been instrumental in my development. So I think that's extremely important. It's good to have somebody like that buys into you, and somebody with those accolades that say, you know what, for some reason, not only did they take an interest in, passing the information that they've learned over the years and that experience onto you. But then it's another thing when they say, you know what, I actually want to do business with you. And that recently happened with my mentor as well. So I absolutely love that. I think that's extremely important. So we talked about the market. We talked about, the economics of the property. Are there any other things regarding the economics of the property or anything around the property that I might want to know as an investor that would be somewhat important?
Yeah, I mean, I think, across all of our nation right now, any market, we do have commitments on the cost to develop, right? And the cost to develop phase one's around $3.8 million for the utilities, right? Which is right in line with what we'd expect, $25,000 to $30,000 per unit for infrastructure, very standard. Now, if you're reading the news recently, you saw steel go up, there's copper that's going up, prices are going up for certain commodities. So, there's probably $500,000 of risk in the development cost that could go up. At the end of the day, we're still looking at a $2.5 to $3 million profit just on phase one. So while there is probably $500,000 to $1 million of risk exposure, we're still covered even from that standpoint. And we can still afford a 20% correction to 30% correction on top of that risk that I just mentioned. So, these projects always come into hurdles. You see challenges left and right, and it comes down to the operator to get through them with, a strategic mindset and, of course, financial responsibility.
Yeah. So that risk really, and how that boils down to the investor as an limited partner, ultimately, that risk is on you, right? And whatever amount eats into your equity, the LP doesn't need to worry about that unless it starts to affect your cash flow.
Structure, and that's the beauty of these pref returns, where you just get a preferred return annually. What you should care about, well, again, always the operator, but you should really, if it were me, I would look at cash flow statements. What's your forecast and how you manage cash burn, right? Now you don't have to worry about that as much in profit sharing because it's just profits, but you also don't have that certainty of returns, right? So this model is a 100% preferred return, which means you don't necessarily care about the risk that much so long as there's enough profits on the bone.
Well, the last thing that we always like to address, is the operator / sponsor, which is you. Yep. And, tell us, for folks that may not know who you are,
sure.
How many of these projects do you have under your belt? And I know that, when you and I have spoken in the past, you've done a very smart thing where you've set up multiple different LLCs for protection and those purposes. But, how many of these have you done so far?
Yeah, so we currently have 510 lots in development, mostly around Austin, about $40 million portfolio in valuation on those. This will be an additional $60 million in valuation. We have, that's just in Texas, right? So we started out in Arizona doing an 80-acre subdivision as well as a 15-acre commercial resort, which we're finishing up right now and exiting that with success on that one. So we've been doing this since 2016, right? And a 5-year track record of success and beating returns in our pro forma. So 5 years obviously is not a veteran by any means, which is why we're bringing in my mentor and sponsor to show people that you do get us, and I have a team of people, but you also get my sponsor. My team is really what matters, right? Now, there is me. I'm extremely organized and methodical about how I go about these deals. But for example, my land operations guy, who is the main guy that does the permit, schmoozes with the city councils and all that. He has 15 years experience working at ExxonMobil, getting approvals for the biggest oil rigs in our nation, right? So he is absolutely experienced when it comes to land development. Our engineer is about 5 years away from retirement. He has 40 plus years of experience in a 27 employee team that has done, hundreds of projects. right? My superintendent, again, award-winning builder, and he is well known across the entire board in terms of his product and quality. I have a CPA for a project manager that has been doing her job for 10 years, right? Who keeps us in line for everything. Lawyers and tax accountants. We have a team that is very robust. So we have more than 150 years experience on our team. It's actually myself is probably the least experienced with only 5-6 years experience doing these projects.
No, it's a great breakdown, and it certainly provides more transparency on what the Red Oak development team looks like. Yep. And it's always great to have addition of, somebody as successful as your mentor. Tom, this has been great. When do you think we can expect to have deliverables to get out to investors that may have an interest in this next project of yours? 100%.
So I have a marketing team that does the package. It's not cheap to do it, so I just paid her to do it. We should have this package back by the end of next week. That will outline everything, the sub-market of North Austin, that being clean Fort Hood, the product, kind of the game plan there, and everything else in between, the terms. Investing, the window will open in early November, right? So we got about 6 weeks, 7 weeks before the funds start flowing in for a close right around Thanksgiving.
I love it. Well, another great deal. And good to have you as always. I love talking shop. I love hearing about new deals. This is what this program is all about. We want to bring those deals in a different format rather than just looking at a piece of paper, although we will have those deliverables for you. With that in mind, we'll see you next time. Thanks for listening on Deal Hunter. And it's where we're going to follow the smart money.
Thanks,
Take care.